Alrighty, so at this point you should have your trading view set up and you should also understand how to use replay mode. So what we're going to go and jump into now is the first back testing session that you're going to be able to do for yourself and also by yourself. Alright, so we want to keep this super simple. So this is basically the model in a nutshell, right? So you want a liquidity sweep, you want an inverse FVG gap, then you want to have a break even point, you want to have clear targets, and you want to have at least a minimum of 1-to-1 RR. Alrighty, so what we're going to do, we're going to go onto the 1 minute. Alrighty. Now, when you do replay mode, you want both of these on all charts. Then what you're going to do is you're going to click replay mode and go random bar. Alrighty, this is going to bring us into a random time. And what we're going to do is we're going to align these. So what you can do for the start is eventually you'll go through and you'll understand how each and every time frame works. But what we're going to do is first we're just going to start on the 4 hour. Alrighty. On this side we're going to use the 1 to the 5 minute for our entries. But all we want to start doing is just looking for highs and lows within the 4 hour. Okay. So we've got one here. Let's just use the candle bodies. We've got this here, that's already been swept. You can see there's a fair value gap down here, like so. And then we have this space here where there probably is highs and lows within here. Now we definitely want the obvious ones, all right? So this one, for instance, right? This was very obvious. So as you can see, price came down to this low, swept it, and now it's starting to move away. So the next that it's going to go to is this one. So this is an interesting time in the market, right? The reason being is we have this high and this low, and both of them have been swept. All right, so we're going to align ourselves with time, and we're just going to go through an example. Let's go back to New York AM session. Now, if you want the sessions, I want you to go to indicators, and I want you to type in ICT, kill zones, and pivots, and then just use this one for now. Alrighty, go through into the settings. I like to keep mine super transparent so the sessions are nice and faded. If you have them at 100%, for me it's just too much on the eyes. So you can change that by going text transparency. I go to 100. If that's any lower, you'll see like London and Asia at the back, and then the box transparency is at 95. Alrighty, so cool. So let's run through this day like we would. Excuse me. Let's run through this day like we would. So at 8:43 or 9 a.m., this is Asia low and Asia high, London low, and we see already that this has been swept. Now, this sweep is this bottom of the wick. Okay, so you can see that this 4 hour candle, the actual candle body was swept already. Now we can still definitely come down to these wicks, but I like to see the candle body have a reaction first, and that you can have 1, 2, or 3 different entry points at all of these levels. If they come down and sweep one or more, or all of them, then sweep. You can still just take the entry off that, right? But let's have a look. Okay, so we are at 9:28, 9:29. Okay, so the next candle is market open. So the first thing we do is we just observe, alrighty? Alrighty, so price opened up, came down and touched this part of the market, which again is the bottom of this 4 hour candle body. So you could be looking for longs here. Obviously on the 1 minute, the only fair value gaps that we have is this one here. So we would have to wait for a close above here in order to take this entry. Remanipulates the low, so now we're back underneath this level. All right, there's the first step in from buyers. Now, looking at this, we have this fair value gap up here still. If we go to the 2 minute, okay, the only fair value gap we have is this one. This is a super solid trade. Going through the system and just making sure that we're all looking, you have this 5 minute, which is very, very clean. Okay, Got the 4 minute, that closed as well. This is looking like a really good setup. The 3 minute still has here. So look, we're just going to go with the 5 minute. Like so. Buys here. Stops at the low. Okay. Now, this has the liquidity sweep. Okay. So it's swept this liquidity. It's also swept this area of interest, which is the 4 hour candle body low. All right. The break-even point is going to be at the most recent high, which is here. So that ticks the box again. This has a clear break-even point. Now, targets. Looking at all this liquidity here, it definitely looks like this all wants to be swept. We can see that no real liquidity was taken here. We just have highs and highs and highs. So all of these have buy stops in, right? So this is a clear target. The last one, there was a 1-to-1 RR. So we have to make sure that although this looks good, we have to make sure that we can actually take a 1-to-1. And based on this 5 minute, it's very far away. So it's over 60 points. All right. So we need to make sure that what we're targeting is actually something that we think is going to get hit. So we want it within market structure, right? We wouldn't want the target to be up here because there's nothing to really go against. Because we know that price can come up, take the high, and then come back down. And we don't want to be in that trade anymore if it does that, right? So the 1-to-1 is here. So this is a pretty clear target for me. So we'll just let this rip and see what happens. Cool. All right, sweet. So that right there would be the break even. So this trade would be a break even trade. As you can see, it closed here, came down, came up above the break even, went into profit about $385, and then came back down for the break even. Alrighty, so we'll jump out of that one. That was a break even trade. So now this has happened. We just have to wait and see what happens. So we're going to go to the 1 minute, so we've got more data. So looking at the ins and outs of this trade, we have this 1 minute here, which can be used to hold price up. Alrighty, so let's see what happens. Okay, so it just doesn't need this, and then it gives us this 1 minute inverse. This is unfortunately invalid, and the reason being is it goes above this recent high, and past this point here, you'll see that this has the capability now to make a higher low and still continue the bullish trend. Alrighty, not saying that that's what's going to happen. It just has the capability of doing that. So let's see what happens. All right. So, I mean, look, it's unfortunate that was invalid. It's a super clean trade. It worked anyway. And then, yeah, it eventually took all of this high like we wanted it to. It was just a shame that it came down, gave us the inverse here, then broke us even, and then ran away. All right. So it's unfortunate, but it is what it is. Now, it's still only 10 a.m., so we can still wait for the next setup. As we can see on the 4 hour, we're starting to run up to this next high. Let's have a look. Okay, cool. All right, so it's made it to that high. Oh, no, it hasn't actually taken it, so we're just going to wait until it takes it. Boom. All right, cool. So once this 4 hour has been taken, now this doesn't align with time. So I don't really want to be taking trades at 12:41 p.m. because this is the New York lunch hour, right? And the volatility isn't the strongest. But just based on the fundamentals of the system, so you can get some more reps and see how this thing works, I'm going to trade this. Whether it wins or loses, it doesn't matter to me because I wouldn't be awake and I wouldn't take this trade. But let's have a look and see what happens. All right. So we're on the 1 minute. This is the liquidity. Okay. So that's the first tick. It has a liquidity sweep. The liquidity sweep is the top of this 4 hour high. Okay. Now, mind you, this has the capability, right, of putting in a higher high. All right. So we're just going to see what happens. All I want to do right now is just kind of take a trade so I can run you through exactly what I look for and then see the different invalidation points on why this system can save you. So on the 1 minute, we've got an inverse Fibonacci gap all the way down here. All right, we've also got another one here. So because there's two, I'd probably just switch to the 2 minute. and then you'll get a much cleaner one. So what we want to focus on right now is taking setups with clean fair value gaps. Now this one has another one here, so we'll go a bit higher. And let's just try to find, there we go, cool. All right, so this is one fair value gap in the leg, all right? This is what I want you to be focusing on first, all right? The 3 minute has 2, the 4 minute has 1, and let's just see if the 5 minute has 1. Okay, the 5 minute has a small one. For me, I would be taking the 4 minute just based on like the size of things. I like to take it where it's about this big. This is like a perfect size. All right. So we're gonna sell this one. Stop's always got the high. Now, clear break-even point. These internal lows here. The fact that these two lows are very close together as well, I like that. The reason being, when you see lows like this, they do want to be swept. So we then want to go and jump up the short position tool, like so, and we want to make sure that this can be a one-to-one. All right, that's a one-to-one. This is a super clean one-to-one. It's just past these lows. We have a clear break-even point, and we've just swept 4-hour candle body highs. Okay, super clean trade. Whether it wins or loses, I don't care, but this should be a good trade. Okay, stopped out on that one. So there's nothing that you can really go off on the 4 minute to show like why it turned around. The only thing that I can see is we're going against the trend. Alrighty, so you can see this here, we're clearly trending upwards, like so. All right, and you'll see as you start back testing, when we do get a trend reversal, they do come quite quickly, but then for me personally, it's better to just take continuation models. So in this instance, you can wait for a pullback down to this 50% of the range and then continue the trend. So trade with the trend, not against the trend. Alrighty, but that's just the actual work of the system in terms of liquidity sweep, fair value gap, break-even point, clear targets, and a one-to-one RR. So what rule I want you to really install within yourself is, if I am bearish, only look for shorts. If I am bullish, only look for longs. There's far too many times I see people, and even myself, getting into shorts when the market structure is bullish and also you're bullish. All right, so let's continue with this. And this is where we could continue to make a higher high, or we could come down to the 50% and then look for a continuation through and then make the higher high. All right, so let's see what the market wants to do. All right, cool. So we have a bit of a pullback here. It's unfortunate that we got stopped out on that one. There's the 4 minute, it came back, manipulated, took the stops, and then immediately did the move there as well. Look, it's unfortunate, but it happens. Look, you can have two stabs at the same area. So if you get viciously stopped out here, and then you drop down to the 1 minute or the 2 minute, whatever it may be, and then take that setup, then that can also be a super valid setup. So let's have a look at that. The 1 minute does look pretty nice. So we'll just stick to the 1 minute. Let's see whether or not we get this. Nice clean candle. Okay, not as clean. There we go. That would be the entry. Stops go here. Short position. Set your risk to reward up. Right there. Okay. So let's have a look at this one. So we've got the liquidity sweep. Okay, so we've re-swept the liquidity. The blue line is the top of the 4 hour low. We've re-swept that. We have taken out the stops of these. Now, the reason why I'm taking this trade as well is you've seen that we tried to short this. Okay, we got stopped out with this candle. Now, we already know that this thing works. Okay, so it comes down and it does the thing and it does the pullback, right? So the market will come back, take stops, and then do the move. All right, so that's why there is different models out there that will only take an entry based off the second sweep of the actual liquidity, because it means that with order flow, you can confirm that these people have been stopped out, and then you get in. All right, so that's called trading with the institutions. So let's have a look at the next one. So we've got the IFVG here. We've got this fair value gap that's been inversed. So that's a tick. Now, do we have a break-even point? Could potentially use the same break-even point that we wanted before, like so. No, we can't, because that's that's past the take profit, right? Where's the break-even point? Okay, that's the question. Now, the break-even point would be here. The fact that this has already been taken makes this trade invalid, okay? Because we don't have a break-even point. You can see our 1-to-1, the take profit is going to be here. Alrighty? We know that this works, don't get me wrong, but based off the 1 minute, this trade is invalid because we don't have a break-even point. This wick has taken the low, which means if we are going to continue bullish, we can still do this. Make sense? Cool. Alrighty, sweet. So let's see if we have any valid trades based on the 2 minute. This is taken on the 3 minute, taken on the 4 minute. Okay, so you see how this wick hasn't taken this wick? If there was a 5 minute there, then it could be valid, but there's not, which is unfortunate. Nothing in there. Okay, the 3 minute looks alright. So I don't like these sessions. See how it gets like super cluttered? Alright, let's get rid of that. So that was an invalid trade, so we wouldn't take that. Now, the 3 minute has this, okay? So if we go on back and we're writing out the 3 minute, we have this 3 minute in here. Alright, you could potentially use this low as the break even. Yes, it has taken this, which still is alarm bells, and that's the invalidation point that we saw before. And based on, okay, you could probably take this. Alright, stop's got the low. The only thing I don't like about this is the actual targets. Right. So the 1-to-1 is going to be here. Alrighty. So this would be a tough one, right? And this is how I would kind of trade this. I would want to target this, right? Which, let's run through it. We've got the liquidity sweep that swept all of these highs. We've got the inverse Fevey gap. We have the break-even point. This is based on the fact that we think we're bearish right now, right? This has taken that low, which can turn around. But after it's been wicked, we've now got a nice big close that actually inversed that side as well. So for me, if this was going to be the catalyst to turn around, this would get wicked and then we would print something of a high based off that. But if it's done this wick, took the liquidity and then printed another bearish candle, then this to me says that the market is being dominated by sellers. Alrighty, I'd want to be break even in here and I'd want to be taking some profit here. This is 0.73, which isn't ideal. If you wanted to, a bit dodgy, but you could bring your stops up and base that off a 1-to-1 here, okay? Just above this candle body here. You do put yourself in jeopardy. It is much safer to have it at the top of the market structure, but this is something you can do. Okay, there's that break-even point. So we got to break even. Oh, bit of technical difficulties. All right, seems like we're back. So let's go back and put this trade on. I think it was a break even in the end. That would be our entry there. All right, so we sold that. That was the stop loss. Skip through. That's the break even. Stops the break even. Okay, cool. Yeah, so that was a break even trade as well. Look, it sucks again. This came all the way back up. Didn't quite stop us out if we didn't go break even, and then slid to the take profit by the look of it. Boom. All right, cool. So break even trade, unfortunate, but it is what it is. This is why we have such a win rate, such a high win rate. Cool. Let's move on to the next one. As I said, this doesn't align with time, but it is what it is. So now looking at the 4 hour again, now we're in between two highs and lows, okay? So we failed to come above here. We've definitely wicked here, so we haven't made a lower low, and we look very bullish right now. So I'm anticipating that this can come up to a higher high, but it also can just come down. And this is the thing you need to make as a trader, is if you don't know what is going to happen, simply don't trade. Wait for the market to actually show its hand and then trade. All right. So we are at 6 p.m., which means it is the opening of the market. Cool. All right, let's run through it. There's a new day. Funnily enough, this is exactly a year ago, 29th of November, 24. Yeah, right. Interesting. All right, so I know that this week is Thanksgiving. So we had this big run up here. And now we're opening a new day. All right, cool, sweet. So we went down, we didn't really do much. I mean, we touched into this 4 hour IFVG gap, which could be your entry. Like so. Let's just pull this across. So this is the 4 hour IFVG gap, and you can see that it was touched. We had a nice reaction, came back again, bit of accumulation, went up, came down and touched it for the last time. This low was protected, and then we have this big run up. So this is how powerful 4 hour IFVG gaps are as well, right? We're only focusing on the 4 hour. There would be 15 minutes, there would be hourlies, there would be all these different IFVG gaps, which we will get into, but we're just looking for the generic system first, and then we'll get into optimizing and getting these sniper entries based on the fact. But all you need to understand right now is liquidity sweep, the inverse, the break even, the clear targets, and the 1-to-1 RR. All right, cool. So now the market is starting to do something, okay? So we've pushed above this 4 hour high, which we're looking to now make a higher high, but we want to see where this closes, right? And of course, we are just waiting for New York Open, which is 9:30, which is that one. It's a shame, I want to see it first. Let's go back to 9:30. That one there. Sweet. So right now, we've had this big run up from this 4 hour, and we're starting to make this higher high. Now, this is a little bit skipped, and I know eventually that this is going to come up and touch this area of interest. And you see me put this on earlier in the video here. These are still and always going to be valid areas of interest, right? And if this is taken and then it gives me a valid short setup, look, I will take it if I'm bearish. And based on this video, I will take it just based on the fact that I want to run through the system with you so you understand it. Alrighty, so let's just play it. Okay, we've made our way up to here. I can't trade this, by the way. Unless I was bullish. If I was bullish for the day, then I can take entries based off this area of interest. Alright? Based off this video, I'm only focusing on 4 hour IFVG gaps. So that's the only thing that I can take. Let's have a look. All right, we've got this liquidity up here, which it possibly could come and try and take. I don't know what happens, but it could give us a valid setup within here. So let's have a look. Let's go to the 1 minute. Sorry, 5 minute. Okay, no 5 minute, no displacement whatsoever. We have this one here. It's the only displacement we've got in the leg. It's already been used, and now we're going bullish. So for me, it looks like we're going to come up here. Cool. All right, so there's the first touch into the area of interest of mine. Alrighty, here's the 5 minute. You could potentially take this leg, all right? So this is the first obvious 5 minute, okay? We can see it here. We had this big sell-off reaction. But let's come down into the 3 minute, the 2 minute, and you can start to see the 2 minute, no 3 minute, 1 minute, no 1 minute. Okay, so essentially the only IFVG gap that we have is the 5 minute. All right, so we would have to wait for that to close if we were bearish. Beautiful. All right. Oh, let's go back a bit. Cool. This is a nice little setup. I like this one. All right. So I'll take this one. Now, my break-even point would be here. That's the safest one. Or here. All right. Either one of these is going to be really nice to take. This is going to be your safest. This is going to be something like if this is your break even, you're probably going to get broke even unless we have this absolute slice through. But let's just see what happens. Cool. All right. So we wick through. So that's the break even. Oh, that was the wrong one. I'll just put these on for visual. There to there. There to there. All right, cool. So yeah, pretty clear targets. I mean, we've got all this balanced price range here that it can want to come into. The only thing I don't like is we have this big fair value gap that if we are bullish, we're going to get kept up with. So it's not the best targets, but it still is a clear target. The fact that we've had this big run up as well, we've taken these two bits of liquidity, then we can turn around here. This can be the catalyst. However, if we are truly bearish, then we really can see this high ran up here. Which for me, you got to understand that when I backtest, I don't have any of the current economic data. I have no idea what happened 2nd of December in 2024. We could be going through all sorts of different economic data to make me bullish based on the fact. And also just when you trade on the day, you'll see how everything's starting to work. And obviously I'm much more meticulous based on the daily trades rather than just backtesting. This is just to prove the system. The money is made and the system is confirmed when the live trades are happening. All right, there's the break even just now. Okay, break even sucks so bad. Came back, took us to have a break even, then went to the stop, so it worked anyway. Is what it is. Alrighty, sweet. That was a break even. So now we can just get rid of these now. Go back to the. Oh. Alright. So let's say we switch bias. Now I'm not switching bias after these two trades. I do like to stick to my bias based on how I come into the session. But let's say, for instance, this has been taken, and now we're going for this. Let's say at this point, we've taken two shorts, it's refusing to come down, so we're going to look to take a buy. Alrighty, so at this point, what different areas of interest can we use? On the 4 hour, we really don't have much, which means I would have to swap down to the 15 minute, which I don't want you focusing on just yet. But see if we get any pullbacks. Okay, we're just accumulating. We're also at a weird time, so this is Asia session. So this is now London session, okay, 2 a.m. This is where we'll start to see something. Let's see whether or not we've created something in here, all right? So we've waited the whole day here, and then we got a 4 hour fair value gap that's been touched in here. Sorry, being created in here. All right, we've touched this. We're pretty much ranging in between this 4 hours. So for me to take longs based on this system, I'd need the 4 hour to come and get swept. So we'll see if that comes and gets swept. Okay, cool. Sweet. All right, so this is my area of interest. And this is when it's swept. Alrighty, so we're currently on the 5 minute. You can see that it got absolutely diced through, and on the 1 minute, we didn't get a chance to get any entry, right? So there could be a 15 minute, an hourly, or whatever that's like further down, or in fact, looking at this, the 4 hour, the lower one was the one that's touched. So this one here, that was the one that's touched. All right, I missed that one. Alrighty, so let's have another look. All right, cool. That's where it was taken. Let's go to the 5 minute and see how this actually played off. So with the 5 minute, it came down here. If, say, on the day I missed this fair value gap and I was only focusing on this one, then this would be my entry. All right, so this doesn't give us an entry based on the first dice through. Then it comes down and touches the liquidity. Now this wick here is where I'm looking for the fair value gap to inverse back up to the upside, because this is the leg that touched the liquidity that gave us the reaction to the upside. Okay, so let's have a look. That comes in. No 2 minute. Let's have a look at the 3 minute. No 3 minute. Let's have a look at the 2 minute. No 2 minute. Let's have a look at the 1 minute. And we do have a 1 minute in here. Cool. All right, so if we can get a nice close above this fair value gap, but not above here, this looks like a good setup. Let's have a look. Unfortunate, okay? So based off that one, we can't take the entry on that. This is the 4 hour, and then this is still the 5 minute based on there. So if we are still bullish in bias, then we'll wait for this one to close. You can still take this one. Let's get a nice close above there. There we go. There's the 5 minute. Cool. From here, stop's got the bottom. Now this is a bigger trade. This is going to be your break even here. The reason being, we have a 5 minute inverse, a 5 minute bearish fair value gap in here. So that's going to be your first target. All right. Now, obviously, this is a massive trade. All right. The stop loss is over 61 points away. But yeah, still a decent trade. Let's see what happens. All right, there's the break even. Okay, so as you can see, we opened up, we wicked over. As soon as that wicks over, my stop's to break even. We haven't been wicked out yet. So stops come off. Unfortunate, came back down again. And then went to the TP. Alrighty. Don't be disheartened by the break even. Just know that it's there to protect you. Alrighty, so that's that one there. Now let's go back to the, where are we? Okay, so we've came down, we've touched this, now we've came up and we've touched this. So we still can be heading for the here, but let's just see what happens. What time is this? This is the New York PM session. Cool. All right, so now we're at the top of this 4 hour. I'm not too sure, but we could be at all-time highs. Okay, so because we're at all-time highs, if you ever do trade all-time highs, we've just come off one. You basically just always have a bullish bias. You just never short the top, because this thing can just absolutely run. There's so much euphoria and stuff like this, so it'll have small pullbacks like this to entice shorts, but then it'll just continue to run up like so. Alrighty, sweet. So what I want you to do is I want you to go back and do the exact same thing that I've just done. What I'll do is I'll skip through like another couple of days and just try to find a winner. Let's just go back to, let's go 1 minute. Random bar. You've had, I think through this one, we've had like 2 or 3 break evens. We had 1 loss and we haven't had a win yet. So let's just run through and find ourselves a nice winner. All right, so you can see the market structure is bullish. Going off the 4 hour, we have this big fair value up here. So taking longs anywhere in here is a decent idea. All right, what time is it? 5 o'clock. So we're looking to open the market up here. We've got this gap. We could see these lows taken. right? We've gapped underneath this low, so that's a tough one to trade. This is 10 p.m. It's going to skip to the 15-minute. I'm just going to go to New York, 7:15. All right, cool. This is better. All right, so we're not quite aligned with time, but we still have come underneath this 4-hour wick here. And we also have this wick here as well. That could possibly be an area of interest. And of course, we have this one. Now, for me, I think this one's going to be the catalyst to turn the market around. This one, like I'm thinking to myself, why would it come down and take these two and not take this one? And then also take the fair value gap here. All right, so let's have a look. We can skip through to about 9:30. Okay, cool. Coming up to 9:30 is the next candle. All right, sweet. So you can clearly see we're bullish here, right? But in order for me to take longs, I want this to bust down, take this liquidity, and then we can take the entry. Boom. Cool. All right, sweet. So now we have this manipulation. Let's go to the 5-minute and have a look here. 5-minute doesn't have anything. 4-minute doesn't have anything. 3. Nothing on 3. Small one on the 2. This is a possible one, but it hasn't been printed yet. Right? And then we have the 1-minute here as well. So in this case, you could take the 1-minute. You got that one, and then you got that one as well. This one hasn't been printed yet. Let's just skip the next candle. Okay, now let's have a look. So now that this has been printed, you could take the 2-minute, right? Obviously a lot of wicks and stuff then here, which makes it, okay, cool, this is good. So if it comes down again, beautiful, manipulates, then we're able to get in lower in the market. So this is why patience is key, right? So on this one, we've got a 2-minute. We've got a 2-minute here, okay? Let's see if we can get this nice close. Okay, a little bit far up. Now we're back in this fair value gap. Let's see the 1-minute, whether that gave us an entry or not. All right, no 1-minute on there. 2-minute. See that? We completely skipped this fair value gap and came back into this 2-minute fair value gap, right? So this is why patience is key, and this is why waiting for the closures is key, right? If we was to just go, oh, you know what, like it's in this fair value gap, but it doesn't matter, it's closed up, it's manipulated twice, we would be in a trade right now. And we'd be down $600. Not what you want. Be patient, wait for the setup. Boom, all right, comes down again. This honestly looked like it's gonna dump. You could possibly take the short here. So this can work, but it also can just get absolutely chopped up. And this is called switching bias. This is where you can get thrown off based off things mucking about, right? So that would be the break even here, like so. The inverse was here. And then targeting this last 4-hour candle wick, which I think at this point is going to hit. This was, in terms of RR, stops at the low. All right, clear 1-to-1. For me, the clear target is this one. I believe that was always going to get hit, as I said at the start of this. It had a clear break-even point, which would be this low here. As you can see, that was the entry. I got in a bit late because I missed the candle, but that was the entry. It didn't get stopped out. So if I was to hold this, it would be 2 to 1. But as I only go for 1s to 1, as soon as that is a 1 to 1, I'll immediately move my take profit to the 1 to 1. Now we're blessed with this to get sliced through. It tries to come back up. It missed my take profit. It might come back and grab it, who knows? But there you go. So there's a nice 2 to 1 with trailing stops based on the 1 to 1. So as soon as it went 1 to 1, we put our take profit into profit, and then it came down, took the thing, and then now we can also take another one back up. All right, as per my rules, I'll be done for the day, but that's not what we're going off. We're just going off 4-hour liquidity sweeps and then the system that comes from it. All right, so at this moment in time, when the liquidity's been taken, we have a 3-minute, so you could wait for that one. Like so, you press buy, stops at the low, risking $1,000, 50 points, 1 to 1, break even point's going to be here. And we just let it rip. Okay, cool. There's the break even point. Oh, that's break even trade. Spewing. I mean, at this point, like, you can start taking partials if you want. That came up to a 0.73. So this took 75% of our take profit, which in that regard, it's kind of like, yeah, you can just go, okay, whatever. Let the thing run. It's totally up to you as with you as a trader. If it's coming up 75% of my take profit, I'm probably going to take some profit off the table. Like, there's, you know, I'm risking $1,000. It came up 750 in profit. It's like, at some points you just need to be like, okay, cool, take the money, right? So for me, I would have partialed at that. But let's continue on. So it had the liquidity sweep, had the inverse, had the break-even point. It had clear targets for me. We can target something up here. And I had the 1-to-1 RR. Let's see if this wants to re-manipulate the low. Okay, re-manipulated the low, and it also created another 3-minute. Let's have a look at all the time frames just to make sure. Nothing on the 5-minute, nothing on the 4. 3 minutes got a really nice inverse. 2 minutes got nothing. 1 minute there should be. There's 2 there, so we'll just stick to the 3-minute. See if we get this entry. Re-manipulate it again. Okay, we could just be selling off here. Alright. Yeah, just a big sell-off. Cool. So at this point, just leave it. Alright. I wanted it to go up. It didn't want to go up. So that's fine. It didn't really give us an entry. It got us in one entry, which was the 3-minute, and we took that, and it was a break-even trade. Then it just kept just re-manipulating. There's just a lot of selling pressure in the market. So on this day, it's just a sell-off day. So we leave it at that. All right. So now you've seen a couple break-evens, you've seen one loss, and now you've seen one win. You should basically understand the system. You want liquidity sweeps, and for now, I just want you sticking to the 4-hour areas of interest, right? So look for the obvious highs, look for the obvious lows. So like, look at this, for instance, right? Look at this for a run up. So we have this big low, right? We put this candle body in, price accelerated away from it, right? But then in this candle, it came down, took the candle bodies, and look at this run, massive. Let's see if we can get data based on that. These are the trades that we want. Let's have a look. All right, so this is the moment it hit it here. All right. This blue line is the bottom of those 4-hour candle bodies. Now looking at the 1 minute. Okay, this is the moment that it was hit. Bang. So starting for the bottom and going up. just because this is the data that I've got. You've got this 1 minute here. Let's go to the 2 minute. 2 minute, we've got a massive one up here. 3 minute, about the same. 4 minute, 5 minute, that's all. All right, so in this case, it'd be the 1 minute or the 2 minute. This thing just absolutely turns around and runs and invalidates the trade based on that. So at this point, 7:48, no idea what happened, but we just had a lot of buyers coming in underneath here, and then there was no entry for us. All right, let's run through, see if we can get a remanipulation. Unfortunate. Right, no more entries in here. Well, let's see what New York did. All right, so from here, we have a lot of order blocks within here. We're in this bearish FVG gap, which is here. What I want to see is New York open, come down, get a better buy price, and then speed off away from it. So let's have a look and see what they do. Shoots up. Now we're in this bearish FVG gap. Where's the open? Yeah, looks like they just... All right, this is another advanced concept. So basically the 9:30 open price, it looks like they came up and they enticed a lot of people buying, came and stopped all of them out, came back to the original price, and then from here they can just look to run away from it. Yeah, unfortunate is what it is. And it was also FOM. Oh wait, no idea what that is. Maybe Trump was speaking. Yeah, it looks like a Trump candle. Yeah, super random time, 118. So that's what you got to keep on the news. So more so just understand that this video is going to be about understanding the system, and then also just understanding, look how much of a catalyst these 4-hour candle bodies and also the 4-hour candle wicks and also the 4-hour fair value gaps can be in terms of turning the market around. Then the system is the easiest part. You make sure it's been swept, which is what we just talked about. It gives you an IFVG, it gives you a break-even point, it gives you clear targets, and it gives you one-to-one RR. Alrighty, go through, have a suss. From there, once you go through and you start to understand the system and see, you know, what worked, what didn't, then we can go through the different ins and outs of liquidity in the 15-minute and the 5-minute and the market structure and stuff like that, and bias. Save your best trades, and then we'll go through them at a later date. But yeah, have fun, enjoy it. Just remember, you can't control the market, you can only follow the system. All right, if you're following the system and it loses, it can just be a good loss. We don't have a 100% win rate, unfortunately. There's not many things in life that you can just be a 100% win rate at. Trading is definitely not one of them. We have to take the losses with a smile and just make sure that we're not taking the emotions into the next trade and just sticking to the rules, right? We have a profitable system. As long as you stick to them, you'll be a profitable and proficient trader. Good luck, and I'll see you in the next meeting there.